How are we doing?
Well, we should be very, very shortly in the arms of YouTube. Geez, that's a dangerous place to be as well. I don't like YouTube, but then anything that's got anything technical about it doesn't like me anyway. Or is it me that doesn't like it? I don't know. At the end of the day, it's normally an F up. G'day, everyone, and welcome to Learn to Trade Live and Free with Ash and me. And it is final one for the week of the UK session. I'm glad you could join us, if only for today and not the rest of the week. But if you've been here all the week, then thanks for your company. It's been fun. I think we've made some money, and that's probably a good thing. FOMC overnights, pretty much a non-event, Ash.
To a degree, yes, it was. I suppose the only thing about it was that the fact that we had such positive sentiment in the market after the Gilead announcement and headline, that what it was able to do was at least keep the market buoyant. You know, Jerome Powell has an ability of subduing the market, and to a degree, I think he probably did say enough that would suggest that the market could be subdued. You know, he was talking about how difficult this next period was going to be for the economy. But
I thought it was very unusual in that it was pretty much one track. It was all about coronavirus, really, and very little else, I thought. Maybe
yes,
I need
it
to
was.
read again.
Yes, yes, it was. Yes, it was. So I was just going to bring up my chart. Now, just before we start, mate, I better bring this trade to the guys.
Oh, yeah.
I've taken a trade in the euro. It looks like it's on its way, which might be.
You're on my turf, buddy.
I'm on your turf. I took a trade in the euro, and it was last night. It was actually shaping up pretty well last night. So I took this trade in the euro. My price here, if anybody wants to try and get in, and I think there's a good chance you will, to be honest. I know price looks like it's taken off now, and maybe it stays doing that. But the ECB meeting may just bring it back down again. So let me just get the prices on this one. So we're looking at 1 point. Let me just write these down for you guys. Oh gosh, where's my pen? Oh no.
Hi, Swee. Hi, Raymond.
My little hurricane has stolen my pen. 1.0859 with a stop at. Oh, let's do it like this. 1.0859. So entry is 1.0859 with a stop loss at 1.0835. Stop loss at 1.0835. And the take profit area is I mean, you could go in at what's that? It's about 25 pips, which actually takes you to the high. You could well, you can't. I was going to say you could take some profit now, but obviously you're not in the trade, so that's a silly thing to say.
That's a very good thing if you can do it, though. You get away with it.
It'd be great.
Hey, broker, pay me now.
Now my stop loss was going to be on the daily. Sorry, my target was going to be on this daily here. So we have this as the real take profit area up here. So 1.09224. And I'd quite like to see, you know, whether we get up there. It's a soft target, 1.09. Let me just move this out. 1.0925, I guess. $1.0925. And that's probably a take profit one area. So we're looking at maybe a Looking at 60 up. We have 3-1, 3-1 to get to this point, and then I'll take half of the money there, and at that particular point, I will still use this marker as a soft target because it could well come down here. But let's talk about the trade entry. I mean, at least if I can't get you into this, guys, then it's at least talk about yes, the euro. Let's at least do that. So let's talk about the rationale behind this.
Wait, can we come back to it?
Sorry. Yeah. Let's do that. Do that in a minute. Yes. Market is just opened up, easing a little bit to the downside. Let's go to Jeff. Place the pound trade. Gold is also a buying opportunity, but on the very short term. So that one may well have to be missed. So you take the screen, mate.
Yeah, I'll just do this very quickly and give you the parameters, and then we come straight back to you. Screen. Come to me. Okay, so I suspect there might be a couple of people in the room that we haven't seen before. So I'll come back and explain this, but it is an OCO trade. So one cancels the other, and we've got a long order set at, I didn't write levels down. I didn't write them in my brain either. The level for the long is 124.97, so 1.2497. And I'll just check that for accuracy. High is 1.2482. Yep. Okay, so 1.2497 is the entry for the long. The stop loss for the long is same bar, or this bar rather, sorry. 1.2442 is the stop loss for the long. And it's also the entry for the short. So entry for the short is 1.2442, and the stop loss for the short is the same as the entry for the long, which is 1.2, and I forgot it already, 1.2497. Okay, so if either one of those triggers, then we cancel the other, and we go to a 15-minute chart and trail 2 bars. I'll come back and explain that if anybody needs it explained. Otherwise, Ash, let's go to those trades.
Okay, fantastic. FTSE 100 is showing some signs of weakness. If you want to pass me over the screen, mate. FTSE 100 is showing signs of weakness. This, I think, is a really interesting trade, an interesting chart now. Let's talk about the euro first. Talk about the rationale behind the euro. So, firstly, I want to start out way long, a nice longer term time frame. And what we had really is a break of this area. This is a daily chart here. It's a daily chart, and what I was looking at was this. Sure. What's that, buddy?
I was just talking to Fed, mate. Sorry.
Okay. This it's kind of a falling wedge. It's maybe you could call it a triangle, but either way, it was a consolidation pattern, and and really I was watching this one break out overnight. So yesterday it managed to kind of just get the close above, and then we're just waiting for the retracement to kind of come and test the area back down here again. Noticing that this 4-hour chart, now this is really the interesting chart for me. We got a 4-hour chart. Now my preference is always to try and pick things up on a shoulder of a head and shoulders or inverted head and shoulders pattern. So I'll explain the inverted head and shoulders if there are completely new people in, and give you some clarity on that. But what the other thing we have here is a 4-hour, really a 4-hour trend to the upside. So what we had was this low down here. So we had this price, a lower low, and then all of a sudden price starts to hold. And if you notice where it holds right along the horizontal level, right along here. So that was the previous break. That's where it needed to break through, really, to go to the upside. And it came down, it held, it came down, it held. We can move that line down a little bit there. There you go. So there's the horizontal level there, extrapolating right the way through. and you see it comes down, holds, comes down, holds, comes down, holds. So that's really the first flag. So, you know, I started on the daily chart, having a look at the main pattern, and then I see this, this is a potential flag for some upside. And then what I want to also see is a reversal pattern. And what I did get was an inverted head and shoulders. So you look at this on a price action chart. Let me just bring that down just a little bit. You look at this on the price action chart, then what you have is a neckline right along here, and an inverted head and shoulders going along here. Should be able to draw it like this. There's the left shoulder there, there's the head, and there's the right shoulder. And the price action on an inverted head and shoulders goes left shoulder, left shoulder, left shoulder, comes down, makes a head, comes up, right shoulder, right shoulder, right shoulder. And then, you know, what I needed is this for this to go through. And then I'd have this as a potential measured move. The distance between the neckline and the head as a potential measured move, which leads us up here somewhere. Or we could use the daily pattern. You know, either one of those two would be absolutely fine. So looking at that, that explains the rationale behind why I'm taking the trade. You know, after that, you're really looking at you know, how you're going to get in. What's going to be the entry? That's when I like to go down to my hourly chart and just see what the hourly chart looks like. And the hourly charts just started to make a trend yesterday. You know, this is the line that we've extrapolated from the 4 hour, and it just started to make a trend yesterday. There, back again. You know, making a higher high. We're not able to get through this level, so it's got to get through there. But you can see that the lows are getting higher and higher. And we just see this little 4 hour trend kind of starting to, sorry, it's 1 hour trend just starting to establish. So I'm trying to pick it up really on the low end of that 1 hour trend, and it's still around the right shoulder area. Now the Fed coming out obviously is going to help weaken the dollar. The issue is definitely going to be. It's definitely going to be the ECB. The ECB's out later on, and that may well weaken the euro. But let's see what happens. And you know, maybe we get to the take profit level before the ECB even comes into play. That's the hope here. So that's the explanation of the trade. I always take my lines off when I'm trading, but you can see that the entry was this area here. So just as it comes back down again on the hourly, and it holds, gives us a little kind of a low test, if you like, or something that looks similar to a hammer. It doesn't quite qualify for the hammer, but it is holding. It's continuing to hold, but it's holding along that line. So you know, and you have to kind of like change where these lines go. It would have started there, but as soon as this low gets moved down and pushed back up again, then you have to move it again, and then it's holding, and it closes above, and then you can take the trade to the upside. So that's already at break even if you were to take profit here. I'm not going to do that. I want a little bit more out of this one without needing to make it safe. I think this has got a pretty good chance, and if the ECB helps me out. There's every chance that this one really could go quite well for quite some time without having to worry too much about profit. Now the target is up there, and all I'll do with this is just have a look. Now I've changed my screen down so it's a bit smaller so you can see the pattern a bit clearer. But if you needed me to blow it up, let me know. So here was the pattern that I was talking about. There's the left shoulder there. There's the head, and here's the right shoulder. And if we have a look at the neckline and have a look at the horizontal level that I was discussing, actually, we don't need that one. Take that off. And then we can do a measured move on this, and the measured move will come from the top of the neckline down here. And that takes me way beyond the highs, actually. So I you know, this has got a pretty good chance of getting to that level on a take profit one, just on this this pattern alone. Now, if I was to consider the daily pattern on this and where it may go, then I would do a measured move of what the pattern is, and it is this. Let's get rid of this. It's the range inside here, and the range inside here is that. No, it's got to break out, and the chance of it breaking out are very slim. So that's why we take profit in this area and shift stops up to break even. But if it was to break out, that would lead the euro right the way back to 1.25. Now you got to consider what the fundamentals would have to be to drag the euro up there, and they just don't exist right now. So I'd have very little confidence in the euro breaking out and getting up to that particular point. But you know, the chart is saying right now that we should be looking for upside. So that's what I'll do. We'll see if we can let it run. I don't know. I don't know what the prospects of this going that high are, but they do appear to be there anyway. So where's the resistance trend? Oh, you can see it. Great. I'll just blow this up again for you guys, so maybe you can see it on there. It's the 16th of March, and then the 27th of March, 30th of March. That's what's given me that line, because it's already broken through this one. You know, there are always multiple trend lines, but it's already come through here. So that's where the break and the retest happen, and that's why the trade is on when it comes back to this area on the daily.
You can't really put your trade on the chart, can you, in written terms? Because, or can you?
What do you mean? Write it all out?
Well, yeah, the dude, the people who are yet to get into that trade, can they still place the order?
Oh, let me see if it's still. Yes, you should be able. Yeah, you can still place the order. Yep, because there is a chance if you want to place this order. There is a chance that this comes back because we do have ECB and you know, the market doesn't tend to move. Oh, what's this?
I don't know.
Oh, that's a bit easier. That is a bit easier, but I don't think. Oh, actually, I might be able to do this. Can I? No. Didn't realize you could do that with GoToMeeting, and I'll get rid of that now. Let me just see. Where's that? There it is. There you go. These are the parameters. And there is a chance it comes back. You know, there's always a chance it comes back on an ECB day. Look at the emotion in this trade right now. Is it likely to break out before the ECB meeting? I wouldn't have thought so, but I mean, you never know. You really don't ever know, but I wouldn't have thought so. And even if it doesn't come back all the way, what you can do, what I did was I took my trade with this area down here as the stop. But if this starts to come back, then you'd be looking at this area, and then you'd be using this area as the stop. Now it's broken through, possibly here, and then you'd use that area as the stop. So you might even get a slightly tighter stop on it, and it pretty much be the same thing. So if you believe in it, then it's just about picking the area, and this is where you start drawing your lines on your chart. You know, there's a trend line down there, so that would be a potential entry. That would look pretty good because of this as well. If you look at that, that would start looking pretty good. So this price is 1.0867. And then you'd have your stops down here at 1.0850. So you could have a 17 pip stop instead of tell you what, mate, I'm just going to drag it down. I can't even work that out. Instead of 25. It's terrible, isn't it? So yeah. So anyway, the euro long is the idea. Now, if you get the direction right in a market, then you know 80% of the work is done. You don't need to worry too much if you don't quite get the lowest point on the entry. It's all about whether you get the trend direction right. And if you get the trend direction right, then it doesn't matter where you enter, because it's going to pass through that number at some point. If you get the trend direction wrong, now don't get me wrong, price is king, and you want a good price on any trade, because it can put your stop loss in all sorts of bother and your risk reward in all sorts of bother. But you don't have to be so concerned if you don't get in at the first low. You can get it at the next low. That's really the point I'm making, as long as you believe in the price action going in a specific direction. Now, the Fed kind of helped us out a little bit yesterday, because Jerome Powell said that he's going to keep the same purchasing program in place, and rates won't be moving. So he didn't say he was going to add stimulus, but things are staying where they are, probably for a little bit longer. So
QE that isn't QE and hasn't been QE for the last 6 months.
Yeah, exactly, mate. It's a strange. Yeah, I don't know why they just don't call it what it is, but
I don't know either. But there you go.
But they did
Under
say
instructions, I suppose.
He was asked, whether QE would come into play. Yes, you could also take the neckline, LT. Yeah, you could also take the neckline. That would be absolutely fine. I don't think we're through the neckline as yet. So let's just double check. No, we're not. The neckline really is right the way along here. What you'd have to consider with a neckline is there enough room between your entry and there would be, actually. You'd still have a 2 to 1. Well, maybe a 1.5 to 1 if it can get up to this area here. Now, there's every chance that this trade still fails without me making it safe. And the reason that I'm not doing that is that, and this is really back to journaling. As I've logged my trades, I have noticed that it's better to let the trade run for around about 2 to 1 and above on the first take profit, rather than taking profit at 50%. The point is that if I let it run and take profit later, those trades that come all the way back, don't quite get there and come all the way back, but I could have taken profit halfway up, but they come all the way back and take me out. They don't make so much. The trades that win make a lot more money than the ones that eventually come back and lose. So I'm better off losing 1%, 1%, 1%, then hitting a 2, 3, 4%, than taking half, taking half, and then only able to make 2% out of that trade or something, or 1.5% in total. It seems to me that the work's a lot harder to do it that way. So that's why I'd prefer to let the first wave run. And what I'm really looking for before I move my stop I won't move my stop when I take profit. I'll move my stop way earlier than that, because what I want here is for my trades to be confirmed as being correct. And the best way for my trade to be confirmed to being correct is if I get this bar here moving higher, and if it takes out this area, so showing that the trend is continuing broken out, that means it's when it comes, or if it was to come back, the likelihood is it's got to come back and test this area here, rather than coming all the way back down to the start, where the trend started. So I'm waiting for a close above the resistance point. If that happens, then I can move my stops to break even, because I've got a bit of a safety barrier. So that's the way that I'll trade it. I won't. I'll probably move my stops, as I say, before I take my profit, and then it'll give me a chance to let it run a little bit, and I can have a look at this area. Because the other thing about the take profit area, you notice I haven't got a line on my chart, because I don't want to take the profit here if I don't have to. But if I see some weakness in this area, then I'll take half the trade, because what could happen is it could just explode to the upside, and then I've missed out on a big chunk where I could have left a whole one trade in the market, rather than having to rather than taking profit and then maybe see it take off. I've done that way too many times in the past to know that that's not the best course of action. What I want to do is, if I catch a trend, I want to really play it. I want to play that trend. And Jeff was talking about yesterday about tightening up stops. What I can do here is tighten stops up to a shorter term time frame on half the trade, and see if I can let it run from that particular point. So that's the euro, mate. Now let's just get to the FTSE. Crazy day yesterday in the global markets. Absolutely, mad day. So what we've got with the FTSE is a breakout of a pattern that is currently coming back and retesting it on short-term time frame. So the pattern on the FTSE is a rising wedge. Now I find this rising wedge pattern fascinating because the rising wedge is a bearish pattern, even though it suggests price is going higher. As this price gets squeezed, the greater likelihood is that it breaks lower rather than higher. So what if this comes back into this area? I'm sure Jeff would be all over this one on analysis. I don't know whether you take this trade, mate, because I don't know whether you're that interested in the FTSE. But if it comes down there, you'd be looking for this, wouldn't you? And seeing whether if it tested that upper level. Oops, wrong color. And then it's starting to fall back down again.
Yep, that's my paddock. What I would prefer is it doesn't test that level again, that it actually puts in a lower high. That's what I'd prefer. But either would do.
Yeah. So that's what I'm looking at with the FTSE. I'm looking at can the FTSE break to the downside, back inside its pattern? Because if it does, that's going to start looking pretty negative. Now, I said yesterday about the global markets starting to show potential levels of resistance. Now, I'd want to check out the VIX. So this would be my process for having a look at this market. I know, mate, it's crazy. Lewis, the FTSE has been absolutely astonishing. But we got to start considering that the short is coming, because I say it and I say it and I say it. The GDP data is awful. The data is terrible. And Jeff was asking yesterday, does that change our bias of the short? Absolutely not. I'm still looking for the shorts in the FTSE. I'm still looking for the FTSE to come down to a short. Sorry, because the market's fundamentals are bearish, and when the technicals don't match the fundamentals, I've got a bit of an issue with that. So I'm just waiting for that to happen. And I tell you what it really comes down to is, have we got a catalyst? Yeah, the short is on its way. I just don't know when, and it might be higher. It might not happen till here, but it's going to happen, and it's going to happen probably pretty aggressively. But the question is, what's the catalyst? Now, overnight. Now, this is the thing, and this is a little question, and for everybody to mull over. This is and something for you, Jeff, to consider, and then let me know your opinion on it.
Paying attention.
But Donald Trump. So we've had your mate Donald Trump. So we've had the news from Gilead yesterday, and Gilead have said that their Remdesivir. See, I've been practicing pronouncing that for you, mate.
Perfect.
You like that? Remdesivir drug
what was that?
has enabled people to recover faster, but it's not a vaccine. It's just enable for them to recover. Now, it's in very, very early trials. 1,000 people have been tested on that, near enough. So it's not a huge again. It's not a huge, hugly positive headline, really. It's not a vaccine. It's not really going to cure people. It's just going to put people back, some people back on their feet, faster than they would have got back on their feet anyway. We don't know whether those people would have lived anyway. All we know is that it seems to ease some of the reparation period, if you like. So that's the first thing. Now, the second thing is Donald Trump is starting to really fire some verbal ammunition at China to do with the coronavirus. He's on it again. He's at it again. And overnight, what he said was that he believes that China is trying to make him lose the 2020 election. Now, Donald Trump is incredibly paranoid. He's one hell of a paranoid character. And he is also extremely aggressive with that paranoia. He's no wilting violet. Is that the right term?
Something violet. Shrinking violet.
shrinking. He's no shrinking. He's no shrinking violet. You know, some people are paranoid and they just sit in the corner, rocking back and forth with their head in their knees, and they don't really do anything about it. They kind of want to stay away from conflict. Completely opposite with Donald Trump. You know, he doesn't care. He loves conflict. So. Well, this is the thing, but Lewis, it doesn't matter whether he's a moron or not. All it matters is that he's created a hell of a great base to trade within, and not because we're always on the right side of Donald Trump's moves, but the fact is he has created volatility. You know, that's one thing about him. He makes things happen.
He's got that in common with every successful businessman. They make shit happen.
Yeah, they do. They make stuff happen. So he's on it again. So anyway, he believes that China are out to get him. You know, he thinks that there is. Well, he is amazing for his age. Yeah, there's no doubt. I mean, I don't want to get into complimenting.
Oh, you mean Donald?
What's that?
so you said he's hyper for his age, or look, LT said he's hyper for his age, and I said, oh, well, thank you. And then I said, oh, sorry,
yeah, well, this is, you know, whether we compliment him or criticize him, it doesn't really matter, you know. There's lots of things that go through my mind about Donald Trump, but the truth is I don't know him well enough to make a true judgment. So at this stage, I won't really be getting into that. But what I will say is that he moves the market, and he moves the market in the way that we need it to be moving. You know, it just needs to move, and that's what he does. So he's come out and he said that China are responsible for trying to make him lose the new election, and he will be taking serious ramifications for China. So here we're back to potential trade wars again. Now, my belief is the closer we get to those primaries in December, the more the intensity will ramp up. And the more the intensity ramps up on somebody like Donald Trump, the more he does random things and does things that are just beg a belief, you know. So the stock market has rallied to a pretty decent level. Now you'd think that any president that is currently in power is seeing things turn around, and would be really happy with the state of the situation. They'd just be sitting back until things change. Not Donald Trump. You know, he is straight on the attack again. And if anybody's going to drive the market to a position that he doesn't want it to be, it's going to be him. So that story is going to develop from here on in. And as I say, watch out over the next few months until December. I think we are in for a really interesting ride and pick up in volatility. So we are going through the process here. We've got a daily chart on the FTSE 100, just approaching the top end of that rising wedge. Negative, very, very negative. But who knows? It could reverse here, and we might all we might be doing right now is just testing the level. That's possible. Testing the level, and we go higher again. So this has to develop. We got half an hour before this 4-hour bar closes. If this 4-hour bar is an engulfing bar right within this trend, then I'll be taking Jeff's counsel on the best way to have a look at that on the methodology that he uses to trade. But we'll get his opinion on that in a moment. Let's have a look at the S&P. S&P is interesting when you look at these weekly charts because of the horizontal level that goes right along here. You know, this is definitely in existence. Resistance didn't get through. Resistance didn't get through. Support failed. Support failed. Look at these bars here. Pretty much closing prices. That one did dip down, but it was pretty much a closing price here. So that is an area that exists on the weekly. Now I'm going to have to come down just a little bit here. That's okay. Let's have a look at the Dow. Dow Jones Industrials. Where are we at with this one? Bit scruffier, but there is some evidence that this could be the first horizontal level that it needs to get through to really change things around. When you look at this on a retest, it comes down. It tested this first low down here straight away, went through it. This is the next one up here. Then we go here, then we go here, and then we go all the way back up there. So this is the next one. So there is a potential for this one also to find some problems here. Now that doesn't mean it's going to reverse from this point, but it does mean that this is an interesting level to start sharpening up our tools to know whether there could be some kind of shorter term reversal to potentially make a play for a longer term move back to the downside. And that's what I'm doing here. This is the pattern on the down. Let me just check one other thing here. Look at that. Now I've had to make it smaller here, so you guys might not be able to see this as well. But let's do this on a monthly chart here, just so you can see it a little bit easier. If we take this low here and extrapolate up right, look where that primary trend is. This primary trend, now the primary trend is generated from the monthly chart because the primary trend lasts from months to years. And this one is extrapolating all the way back down from 2016. There's your next low, and there's the break of the primary trend. Now you can get multiple primary trends, of course, and the other primary trend that was in play was this one here, and that one's hot. That one's held. So you got this one, and you got this one. Now the reason that this isn't an intermediate trend is because it's lasted for years. You know, an intermediate trend is from weeks to months, which you'd have a look at on your weekly chart. But look where we are, right on top of that level. Now we've got today to get through, and if price ends up here, maybe we've broken that level as well. But it has got this, which becomes more interesting, this horizontal level on the monthly. Actually, you know, that's a test point there. We have got this area that you know, you could argue we are getting through this particular level as well, and maybe that argument's you know, absolutely valid. But what happens by the end of today if we end up down at 24,230? So we give back 400 pips. That would suggest that by tomorrow we are looking for downside for the month of May. So let's watch out for this. We've got plenty of the day left. It's got a long way to travel, and I would suggest it probably would need some pretty negative news to come out to come down that much. But it could happen. Who knows? Donald Trump is on the march right now. So that's the Dow. That's the S&P. Just want to check the primary trend on the S&P. Yeah, that one's okay. Let's have a look at the FTSE. FTSE, same deal. Look at that. Actually, no, it wasn't that one. It's that one. Look at this on the FTSE. Break of the trend line, and we're retesting that area. So, you know, more technical reasons for us to be a bit concerned about this move to the whether this move to the upside has run out a bit of steam here and a bit of puff. You know, no doubt about it. Yesterday, really saw in the FTSE 100 what looks to me like it could be an exhaustion bar. Now, we don't know whether it's an exhaustion bar until we get confirmation, but there's a lot. We got the pattern, we got the trend line, we got the primary trend line, we got the S&P, we got the Dow Jones Industrials. We haven't looked at the NASDAQ, but let's have a look at the NASDAQ. NASDAQ practically brought back all its gains. NASDAQ doesn't look too relevant, does it, when you look at that? But certainly, if we come down to some of these other markets, this is the DAX. Very, very similar picture with the DAX. Look at that. This is a monthly chart still. You know, I'm still on the monthly chart, and I'm seeing breaks and retests of the monthly trend line on some of these indices. This is the CAC. Maybe CAC isn't quite there yet, but it is at a horizontal level on the monthly chart yet again. So there's a lot in this area which would suggest that if the market's going to make another what's the word?
Leg.
Another leg. I was going to say another chart, another bash, maybe another bash of moving lower. This is another potential area. So watch out around here is the point. Gold looks interesting to me as well. I think we've missed a trade on gold, unfortunately. A trade on gold would have been, again, looking at this on a daily time frame. Looks to me like we got a trend line along there. There's the minor. That's a minor trend line because it's lasting from days to weeks. This is the start of April, but there's a trend line there. That would be problematic, you know. But I think there was probably a short-term trade on gold to get us back up to this trend line, and then we'll see what happens from that that particular point. I don't know why gold would come down from here, but there are some signs and signals on some of the longer term timeframes that it could be weakening. But we know the story with gold. Gold continues to pop higher. I think it might well be gone for a while. So gold is also showing some signs that that we could be seeing some sort of turnaround in that as well. Let's see how that unfolds. Now the final thing I'd want to see is the VIX. And when I look at the VIX, now the VIX is the volatility indicator. The VIX is the fear indicator. And I'd really want to see whether the VIX was starting to turn around as well to the upside to suggest whether markets are going to be coming to the downside. So what do we got with the VIX? Monthly doesn't give us much. The weeklies don't give us much. Let's see what this is on the daily. Make sure this trend line is tight. Look at that on the daily. This is the VIX taken from the 10th of March, and then the next touch on the 14th of April, and look where we are, right there. Do we have signs and signals of reversal on the VIX? No, we don't. You know, there's nothing to go on, but you know, we're gonna have to watch out for this one on short-term timeframes to see if there's any hints and tips that this is starting to reverse. Might happen fairly swiftly. It might happen a bit more gently. I don't know. There's the trend line on the hourly. It needs to break through that point. If it breaks through that point, that'll be our first hint that maybe some volatility is going to start creeping back into the stock market again. So the point is, guys, be on your mettle for a reversal in the FTSE specifically, because that's what I trade. But in all these global stocks here. Sorry, mate. I went on a bit long there.
No, mate. I'm pretty much in end of the month mode anyway, so I'm not that interested in entering the market. But there are a few things to have a look at when you're ready.
Yeah. Well, why don't you take the screen? Maybe give some updates on some of those trades you're in as well.
Shirley. Stop calling me Shirley.
Oh, I've got something that keeps me awake at night for you later in the US show. Yeah.
How good's that? Maybe there's going to be we might have to start a contest. Thursday, the 30th of April brings us. Oh, that should already be out, right? I didn't update this. Let me update it. And there you go. What was that number? 50.8. Still expansionary, but barely. Interesting. I'm just trying to line up the Aussie actually at the moment because it's put in some decent numbers this week. In fact, one very good number. And of course, it is in a bull run. So I want a chance to get back into it. I'm out of the trade that I was in, but I want to get a chance to get back into it. I want to see a good, nice old retracement. Euro GDP figures. Yeah, okay. What's coming up that's important? Well, of course, we know about the ECB meeting and tip to stay at zero, the refinancing rate, as you would expect. I don't think anybody's about to move on interest rates anytime soon. The monetary policy statement, also similar to FOMC. I don't think it's going to make that much difference, frankly, because we're not in that fundamental frame of mind. I don't think. GDP figures in Canada, however, will probably be interesting. The CAD needs some help, and it needs some help from oil. It needs some help from a good GDP figure. I'm not sure it'll get it, but and I don't know how Canada reacted to the coronavirus in early days, whether their stimulus was enough to be, I suppose it should be February to March. Yeah, it's hard to say, isn't it? And I assume that's February to March. It's really difficult to say whether that would have kicked in. And what I mean by that is if the stimulus was added, and similar to what happened in Australia, where the government pumped so much funding in and everyone into panic mode, and all the supermarkets, as we've all discussed over weeks and weeks now, all the supermarkets and essential services just went out of their incredible comfort zone, if you like, and exponential sales, just incredible. So that will improve GDP, one would think. But whether it's, I don't know exactly how the Canadian government acted, but there you go. And of course, the press conference, which is at the same time, there could be an unemployment claims. If that went down substantially, as they're predicting, it may make a difference. And look, it really has to go down, doesn't it? Because as we discussed last time, we had 3.7 the first time, 6.3 the second time, or something like that, and then 5, and then 4.4, now 3.5 is predicted. It kind of makes sense, because those who really need it would have got in there in the early days, I would have thought. Although I don't know, it's a tough one. Personal spending, yeah, tipped to be minus 4.8. I'm not sure that will be that bad, to be fair, month on month, because again, people out and about. If that includes grocery shopping, what does that include? Good question.
Fuel?
All expenditures by consumers. So there you go. It must have those numbers in there. So I don't know that that's going to be as bad as they predict. We shall see. I'm no economist, as I say, and I'm certainly no fundamental expert. So I'm just having a cursory glance here to see if there's anything that does stand out. And of course, as Ash has already flagged, we need to be taking notice of the monetary policy statement coming out of Europe, and the ECB press conference, which happens 45 minutes thereafter, as well as the GDP figure coming out of Canada. Now, when I started the week, I had a penchant for the Kiwi and the CAD, and both of them I've totally ignored most of the week, which is kind of crazy. And I think I've missed the boat, frankly. I should have stayed there. Kiwi CAD, tough to trade, but the Kiwi versus something else, yes. And I recall the Jacinda Ardern statement, which I apparently misread as saying that they had eliminated coronavirus, whatever that meant. And I know it doesn't mean there's no coronavirus, because they were still getting new cases. But that's turned out to be a catalyst for improvement on the Kiwi. And that's kind of where I was at. But for some weird reason, I just haven't taken advantage of that this week. And that displeases me somewhat. Anyway, that said, we've wrapped up, I guess, a pretty good month by closing out a couple of things. Aussie's now closed out, as we said yesterday. We trailed our stops pretty tight, and they have been hit. Stops were, I can't remember now, in here somewhere, maybe here. And they have been hit. So I don't know, maybe I've left something on the table, maybe I don't care, because it's been a good trade. The other pairs, Pound Aussie, I am still in Pound Aussie, or at least I was a while back. I'll have a look at that directly. I'm still in Dollar Yen. They were the two trades I'm still in. But Euro Aussie, also out of that. And that's pretty much all that there was. Am I still in Pound Aussie? Good question. I don't even know where it is. There it is. No, we're still hanging on. Whilst ever we're below that line, I suppose we've got a reasonable chance, and the daily pivot. But I'm really expecting that to be hit at some stage. We shall see when that is. Dollar Yen, well, it just keeps on performing for whatever reason. and I don't expect that's going to change too much anytime soon. So let's get back to today and see what we've got. We'll start with the euro, and everything Ash said about the euro is absolutely true. What I see in the euro at this point in time is the top of a range. And yes, I see the inverted head and shoulders here. And if that range breaks, and that's a genuine breakout, then you're going to be up here, 110, 50, 60 area. And I don't think that will, depending on what the ECB meeting says, right? But depending on what comes out of that, you'll either be here quickly or you won't get there, in my humble opinion. So that's kind of where I'm at. I don't know what the next direction is, but here's my thought process. On the bigger picture, and that being a daily chart only, I still see lower high, lower low, lower high, lower low. And I still see the top of this range. I also see a little candle there, that one there, which is a little bit indicative, in my opinion, of what could happen next. So the following bar being an inside bar, as big as it is probably potential for this, yes, to go long. It's a bull bar. There's no question about that. But if that bar fails, then this bar looks supreme. It really does, if this bar fails, and it is an inside bar. So I've actually got a short placed underneath there. And that doesn't mean I'm predicting it's going short. What I'm saying is, if it does go to here, it's going to go to here. And that's the only thing I'm saying. I'm not saying, yeah, okay, we've got to get in short, because I'm not in short, right? I'm only in short if it comes to here. And there's a massive difference. So don't think that I'm predicting that the euro is going short. I guess you've got to think of cause and effect when I trade. That's the way I think. I think if price reverses off here, then this bull bar is bullshit. And therefore it's going to come down here, and it's going to come down here with some passion and some violence. And that's exactly how I see things happening. Doesn't mean it will. It just means that if it does, I want to catch it. I want to catch the move. That's all. So I'm not contradicting anything Asher said, because everything he said is true.
No, I think the thing is about what you're saying as well, mate, is if it goes down to that particular point, then I'm going to be stopped out, which means I'm wrong.
Well, this bar will tell. Because
yeah.
either this bar here is fair dinkum and you're up to here, as I say, if the ECB meeting wasn't happening today. But the ECB meeting is up. So we don't know what's going to happen next. We really don't know what's going to happen next. And all I'm saying is, if it does go to here, okay, yes, you're out and you're wrong, but there should be sellers here. They'll turn up pretty quickly, I would have thought. So that's the difference between, I guess, the way you trade and the way I trade. I trade pretty much on most occasions as cause and effect, and you're trading pretty much the cause section. You want to see the market drive because of this reason, but I want to see the effect if it doesn't happen. If that makes sense.
Yes, completely.
And that happens when you get old, Ash. You don't you don't need the excitement of trading at the market or near the market. You just want to wait until it happens. It's simple as that.
Yeah, no, I get that, mate. Do you know, I have to say, the Fed meeting yesterday and the ECB meeting today would normally put me right off taking that trade, and the only reason I got into it is it was just a really nice setup. So I've traded it purely on the technicals.
Oh, and absolutely, as you should. I've got no drama with the trade at all, nothing. And you've got a beautiful bounce off the daily pivot. There's absolutely no reason why this can't break out. It's just not my trading style. Simple as that. Don't have a problem, mate. But what I would say on the smaller time frames, on the 30-minute chart, is I could probably pick something up here if this fails now to go beyond that level. So what I'd be looking for is something like this. Where's my control thing? What platform are we on? Okay. Zoom. Right. I need to pick up a pen. Let's do that. Okay, so if we were now, so we've gone to the top of the range. If we were to now amble in here for a bit, because I don't want to see it go straight there. I want to see a reasoned market. And if the reasoned market takes us to here and we put in a lower high, I guess especially at that level, which is a resistance level of its own, only recency, but it's a resistance level, then I would look to trade it short to the bottom of the range, taking profit at the daily pivot. That's if that occurs. If it breaks out, happy days. Go for your life. It's not going to affect me at all, and therefore I hope your trade goes well, mate. It's as simple as that.
Yeah. Well, there's always another one, mate. If it doesn't work out, then I'll dust down and go again.
No, as I say, if this happens, then I think that happens. But if that happens, I think you're on a good gravy boat. Absolutely. So anyway, that's the differing opinions that different traders have, and I'm not trading. I haven't got my money where my mouth is right now. You have. I'll put my money where my mouth is when I see what I see. It suits me, and at the moment, nothing suits me. So, mate, I'm happy to take your trade. No dramas.
Dollar shall I tell you the levels again?
On Paul's money. You've got the levels up on your chart anyway. I know what they are.
We were right in the CAD, mate.
Which part?
The fact that we were just waiting for WTI to stabilize and the CAD to strengthen.
Yep. Like I said, I think I've missed the boat here a few times this week. I had my watch list was Kiwi and CAD, both long, and I've traded neither.
Yeah, I'll tell you what. I mean, how many of those happen though? There's always going to be some missed, and really we should be celebrating the ones that went well, because the Aussie trade has just gone gangbusters and still is holding up, isn't it, right now?
Yeah, I'm out of Aussie dollar, but still in pound Aussie, and out of Euro Aussie as well, but looking to get back into those after a retracement. So
yeah,
and look, as you say, we've done very, very well out of it. So even if we miss the next leg, who cares? It's not.
It's been a good month. It's been a good month. I think it's been pretty solid. And it is the end of the month. This is the last day of April 2020.
Yep, and that doesn't fill me with a lot of trading enthusiasm, as I said before. But if I see things that pan out, similar to what I've just mentioned, then there's no reason why I won't trade. Dollar yen, wow, it's sat underneath this monthly pivot now for 24 hours, nearly 48 hours really, and doesn't really know what to do. I would have thought that the FOMC or more the statement and the press conference than the numbers would have given this a little bit of a boost, but nothing, absolutely nothing happening. And
there's Crystal. Sorry, mate, go on.
As I say, if I see this get back into here, then on the small time frame, I wouldn't mind trading it to the top of the range. But yeah, I'm kind of indifferent to trading, to be fair. Sorry, Crystal, what?
Crystal just saying that the election's in November. I think you're right, actually. Yeah, it is November, isn't it? I think they get announced in December. So if it's November, so what does that leave us with? May, June, July, August, September, October, November. Donald Trump's got 7 months to cause some upheaval, and he's going to be ramping up. Yeah, I think that the last 6 months, into that is they're going to be really interesting months. And it's difficult as well. The stock market has been on an incredible rally, and there is a little phrase in the stock market which says "sell in May and walk away." Now, it's a bit of a misnomer because what it tends to mean is that people will sell off in the summer rather than May specifically. I think it was just because it rhymes. But I think it's more likely to happen in June. But it might well come in May this year. So that's the other aspect. We got the summer months coming up, and they don't tend to be too bullish for the stock markets globally. So there's quite a lot. I think there's a lot of evidence that that this stock market could at minimum go into sideways consolidation. But when you throw the Donald Trump effect into play, that does suggest there's going to be a pickup in volatility.
I've also been having a look at, and the reason is I'm just interested to see what the market is actually thinking as we do go into May and into the summer months. And I had a look at the Seasonax figures. Wow, I'm stunned.
Of course, the start of November, is it as well? I didn't realise it's the start of November. So you actually got 6 months. Sorry, mate, what were you going to say about Seasonax? Tell me about Seasonax.
The dollar is tipped to be extremely strong for the next, I don't even know how long it is. Pretty much well into summer, though. May, June.
I find...
Right through May, it's supposed to be strong as. I don't see how that's going to happen. But
no, do you know what, mate? I would love to know with seasonality, and the problem is seasonality is such a broad view over a 20-year period. It doesn't go into the details of when it was the opposite, and it'd be almost probably more valuable to know that. Is it that it's positive when markets are behaving. I don't want to say the word normally, but that's just it's a bit of a misstatement, really. But if they're trading, if they're behaving as they on average times would do, because when we are in pretty extreme times now, and I wonder whether there are certain things that just get knocked out of kilt. But a bit like gold, the gold trade throughout the end of the year really was a seasonality trade, and it worked out really, really well. And we were in the third year of Donald Trump's term, and maybe things were, well, I suppose they weren't that quiet because we had the whole thing with Korea and China, but the gold trade worked out. I think you can always make an argument for seasonality to work depending on which market you're looking at. Some will work and some won't. I don't know whether the dollar will this year or not, but there's got to be a consideration that if we do see some weakness in the stock market, will people then move to the dollar for a little bit of safety? And maybe that's what tends to happen. People come out of stocks, maybe move into more kind of safer places to put their money. But with interest rates where they are, I'm not sure why you'd want to buy bonds and things like that right now. Is summer vacation happening this year?
Yeah, it's an interesting point, Crystal.
Well, the tech. Do you know what I thought as well? The markets that have done really well, the likes of Netflix, the likes of Ocado, which is a food delivery service, and probably many more, the stocks that have done really well during and because of a lockdown, surely they are the most obvious ones to sell when the lockdown is lifted, because some of them have exceeded their highs that they were at the start of the year. So Ocado, for instance, has gone way beyond its previous high, way beyond on a monthly chart. So there's obviously a lot of emotion and there's a lot of buying because of the event. So surely that means that when the stock market is back to some kind of regular or when the economy is back to some kind of regular movement, that we will probably see those particular shares actually be the ones that are the most attractive to sell, the likes of Ocado, the likes of Netflix. I think that could be also an interesting play. I don't know when that or if that comes in. They are talking about lifting restrictions in May, and I wonder whether that might just bring people away from using some of those delivery services. Not in the UK, by the way. They're not talking about lifting those restrictions just yet. Yeah, that's exactly it, Crystal. If a tree falls down in the forest and nobody was to hear it, does it make a sound? Obviously doesn't, does it?
That's a keep me awake at night one, isn't it, Crystal?
Yeah, it is. I've always thought that with statues, when you turn off the lights and leave the museum, do the statues come to life and start having a party? If the media weren't there to report it doesn't mean no school shooting. Yeah, exactly. That's the point, isn't it? Things are going on in the world that maybe don't bring the kind of press that is going to sell the papers and the site and the websites and all that. So it won't be reported on. Right, now we are very, very close to the top of the hour here, mate. Do you want me to just quickly grab the screen? Because I just want to show you the bar on the FTSE. Really, really quite... in fact,
sure.
Check it out, mate. Check it out. Tell me the plan here.
What do you got?
If you pass me the screen. Thank you very much. Yeah, check this one out. So FTSE 100 has just put in... So we have to draw the trend line in here. Firstly, just so you can see what the actual level is, and there's the trend line just there. There's the rising wedge, and just so you can see it a little bit easier, that point leads us here, and then we're looking at a rising wedge, which is bearish. Okay, now we'll go to the 4-hour chart. Now look at this 4-hour chart. Engulfing bar right back inside the range. What do you think about that?
Oh, I like it.
I mean, you know, is this something that you'd you know, if you were looking to possibly trade this, it would be something that you'd want to see if it went something like, let me just make it yellow just to make it quicker. It goes up to this point, comes down, and then maybe, well, be difficult, wouldn't it, with the daily pivot, but a stop down.
Daily pivot is an issue. Yes.
Yeah.
Depends on the size of your risk. That would look pretty good.
Well, let's have a look. It's 100 pip risk for a 300 pip potential profit. So you potentially, you know, you could be looking at a 3 to 1. Yeah, I mean, it's got to get through the daily pivot, but I would say that the 4-hour bar in itself shows that there is significant weakness here. And does the trend line or the bigger picture of this this rising wedge manage to trump the daily pivot here?
Nothing trumps the daily pivot for me.
Okay.
Nothing.
All right. Well, maybe what we'd be looking at instead then would be
you'd be looking at it differently to me, and you know that's the whole point.
Yes. Well, it's only I'm really kind of talking about your approach here rather than mine, because my approach is just get into the downside here and hold your breath and see what goes. Would you want to see that instead, maybe?
No, I'd be happy to trade that first one, but I would take profit at the daily pivot.
I gotcha. Yeah. Yeah.
That's what I.
Well, there's a couple of ways to trade that. You know, if you guys are looking for it, because I think this to me looks good. There's a nice longer term move here. So you could go in, don't risk too much of your account, and then you could see what happens. It comes down to that daily pivot. I mean, the good thing about the daily pivot is if you did take profit here and it comes through and retest, you can add it back on again. It does mean a bit more management, but that is a way to have to handle that. There you go. So I don't think there's anything else really for me, mate, but I've already got some there we go. It looks, yeah, FTSE looks pretty good, I would say, for some downside here. But let's see what happens. Yeah, see what your flavour is there, guys. There is a trade there if you want it. There is a trade. The trade entry is now, and there is a 60.84. So you'll be looking at 61.07 on your UK 100, with your stops at around about 100 pips above that. So basically, your stops above the 4-hour bar here. That looks like a decent bar, nice engulfing bar. And then your target is going to be back down to this support line down here on the 4-hour, on the rising wedge, taking only a bit of profit there. And I would wait as well, you know, personally, you know, you could take profit here, but that means you're probably going to need to put at least 3 positions in. So one there, if you like, one there, and then just see if the rest can go through. Because if the market is to tank, it's going to come down a lot further than a 3 to 1. So there is a trade there, and you know, you could be looking at with a rising wedge measured move. Measured move on that leads us right back to pretty much these lows here. So at that point, you know, you're looking at a 7-1 on the second half, if you like. So a 3-1, 3-1 on the first half there, and then another half at 7-1. That there's every chance it could do that if you let it develop. So there's the trade, mates.
Right, bud.
See what gives on that. See if anybody wants to get into that one. Now remember, if you like it, you should trade it, and if you don't like it, you know, completely ignore it. But always remember, you know, our job is to trade. Is the euro strong or weak? Well, looking at the euro looks okay. You know, I'm just looking at this on a euro pound. Euro pound looks okay. It's bottoming out down here, left shoulder. There's the head there. There's the right shoulder. Sorry, down here. So that looks like it could be potentially putting in a reversal pattern down there. The euro dollar looks okay as well. You know, it's already started to climb to its to the upside. So at this current stage, is the euro Swissy. It looks like it's weakening it a little bit against that one.
Swissy's the strongest currency on the board right now. Today, euro is the second strongest, and the dollar is only got 2 below it, Kiwi and the Aussie. So, if that was your question, Crystal, then euro is strong today.
There we go. So we have it from
thus far.
Thus far, yeah. Yeah. Oh, okay, Raymond. No worry. Yeah. Well, that's good. That's good practice, mate. That's really, really good practice. Saying that his 1% is done for the day. 4 trades will do. I think you're absolutely right. Absolutely right. Because who knows which is going to be the best one? Nobody does. You know, I like the look of the FTSE, and there's a potential for a great move, but we are taking a trade effectively off a 4-hour engulfing bar. Yes, we've just, you know, put up a load of patterns and made a pretty good case, I think, for some downside, but the setup is very, very suspect. 1 4-hour engulfing bar does not really constitute a decent setup at all. I like it, and it's something that I'm happy to trade, but that's because of other factors. But when it comes down to it, if you've done your money, then you've done your money, and then you just want to let your trades establish itself now. Oh, mate, you're more than welcome. That's what we're here for ultimately. You know, the trades are a bonus. This is really all about learning. It's not really about, say, giving you guys trades, because what you should be doing is exactly what Jeff said yesterday. Oh, interesting. Let's have a look at gold in a second then. What Jeff said yesterday about not being worried about what everybody else is doing. Who cares? Who cares the way I trade? Who cares the way Jeff trades? Unless you trade that way, you shouldn't really be distracted
absolutely.
by it. You know, and unless you haven't found your way, that's different. If you haven't quite found the way you want to trade yet, then it's well worth dipping in and dipping out and seeing which one you like, as long as you log it properly. And write your own reasons down for the trade. And then you can start to find some patterns within the reasons you're taking those trades. But you know, we're here to kind of aid you guys in the learning process, rather than saying take these trades. We're just telling you what we're doing, and if it helps the learning, then all the better. But you do have to trade your way. Getting concerned with what other people do, it really is a very distracting.
It will screw with your head.
Yeah, it really will. Who cares, you know, because what you don't know is every single trade that somebody takes. And you don't know when they are telling you everything, and when you know, for somebody to be completely transparent, what you'd need to see is their account to know whether they're whether things are going, you know, genuinely well, or whether they're going not so well. You know, I aim for about 6% a month. If I can hit that, I'm really happy. I'm not bothered if it's double figures that. If it does happen, brilliant. But if it's not quite the 6%, and it's maybe a 3%, then I don't care. It really doesn't matter. What happens is that what matters is that we try and chip away at our account. That's what trading's really about. Just chipping away, not hitting it out the ballpark. Those trades, do come every now and again. I think Jeff's probably hit a couple this month. But he won't be concerned if he doesn't get another one now for the next year, probably.
Oh, I will. Yeah, that's too
long. Another day. He's not going to be bothered if he doesn't get another one.
No, and it's the end of the month. I really couldn't give a toss today, to be fair.
Okay.
That said, I've got a couple of things to answer here, mate, I think, before we go bye-byes.
Brilliant stuff. Raymond, that's amazing. So Raymond's back-tested the rhythm of price, and it works. Amazing. Brilliant. Glad to hear that, Raymond. I'm really, really glad to hear that. Okay.
Yeah, Din's very shortly, Helen. Absolutely. I'm not sure what it is tonight. Yes, I do. I was told. Can't remember. Something special, though. Pretty good. I'll report on Tuesday what it was. Monday what it was. Lewis, to your question, actually, I'll very quickly run through the ones that I haven't been through yet. Aussie, I've been through. Pound's looking a bit sick. We got in pretty much on the bottom of these bars. Oh, no, here. No, that's where I got in. I put the wrong number in. You guys should have been in here. Not looking so flash. We need some seller bars to come in. Dollar CAD. And this goes to exactly your point, Ash, which was, remember this from yesterday, where Shukri was saying, okay. Where Shukri was saying dollar CAD short. And we agreed that that was a setup. But at the very time that we mentioned it was here. Price was here.
Mate, we're not looking at you. Are we looking at your chart?
Maybe probably not.
No, I think we are.
No, I don't think we are. So let me try that again. So Shukri was saying this was setting up for a short, or he was asking the question, is it okay to go short here? And the answer was the setup's there, but I've missed the entry. And when you missed the when I missed the entry, I remember saying this exactly. It's a superstition thing for me. And if it goes 200 pips from here, I don't care. It looks like it's certainly gone 1-to-1 at this point. So your point, Ash, being, don't worry what everybody else says. If you've got a reason or more than one reason to do something and trade something. Oh, he's here. I didn't know you were here. Okay, you've got a method of doing it. Cool, whatever. That's exactly what I'm saying. If you've got a way to do it and you see it, trade it. Simple as that. But if I don't take the trade, doesn't mean you shouldn't. It really doesn't, because I've got a different reason not to take the trade, and it's based on superstition only, not on actual facts. So I hope you are trading this in some way, and I hope it goes a million miles for you, mate. Simple as that. From my point, it's a potential double bottom right now, but it's only potential. We've come back inside this descending channel, which is interesting. We've come underneath this trend line, which is even more interesting. That's the one we were looking at yesterday. This now looks to me a possibility to go down as far as here. So as I say, if you are in this, then you may have picked a real good one. You may well have picked a real good one. Let me see if that level's gone. No, that's it, still there. So the double bottom's still in play. So there may be another opportunity to trade this if it sets up, but at the moment I don't see that in any way, shape or form. Dollar Swissy, my God, how do I get into these dead trades that just do nothing for a week? Here's our entry level on this, and yeah, we're just above it. We've been there 1, 2, 3 times, I think, since we placed the order. And if you wanted to get out of this, now would be probably a reasonable time to do that, because we are very, very near the entry, and nothing's changed from a technical point of view. We've still got the double top. We've still come back inside the range. We've still got a lower high, but we haven't got any price action. That's the problem. We've just got a stagnant market. I think what I would be inclined to do, if it does occur, if we do get into any profit just before, I think a first take profits at 20 pips or something like that. If I see it languish around the 10 pip mark, 15 pip mark or something like that, then I'd probably take the profit that was on offer at that point, and I'd make myself safe as quickly as possible, because this is now subject to anything could happen. But as I said, the technicals are still there. We still have a reason to think this can go short. So I'm not advocating that you do anything, but if you're uncomfortable being in the trade, then now may well be an opportune time to remedy that. Kiwi, as I said before, I was bullish the Kiwi when the week started, and I haven't found a way in to trade that for whatever reason. But now I see the breakout of the top of this range, and like I've said many times before, if you were inclined to trade that breakout as false, you probably have to trade it on the daily chart, because I don't see a real bull bar that's gone. Maybe that one, but I think it's far clearer on the daily chart that was the breakout bar. So if you want to trade a one candle false break, then underneath that bar, stop loss above the current bar would be reasonable. So if that looks like that tomorrow morning, for instance, that would be a reasonable thing to do, in my humble opinion. Otherwise, you could wait for it to come back inside, lower high, usual process. And that is just about it, I think, Ash. As I said, I've really got little interest in trading today. But if these things do set up, so if the euro came off the top and gave me a lower high, it'd be interesting. If dollar yen came back inside, gave me a higher low, that would be interesting. Aussie, I just want to see it retrace and give me another opportunity to go long. That's all, because I think the ultimate target is still this level here at what, 167.20. I think that's the level that not 167.20. Wow, that'd be something. 67.20. So 0.6720, I think is the correct level of exit for that one. And the pound, we need a couple of seller bars to come in pretty fast. We are now 13 minutes away from a second one. So our stops, pardon me, would move to there. And then, of course, we'd want to see a few more so we can get in some profit. So that's it from me for this session and the week. If you detected a bit of disinterest in the charts today from me, it's probably because it's true. But that doesn't stop me from trading. And I've got to say, when I approach the market like that, oftentimes trades will just sit up and I go bang and everything works out just fine. So don't think that I won't trade if the opportunity is there, because I will. It's just that I'm really approaching it with a non-expectant attitude. Let me put it that way. Entry is difficult. Okay, I think we're done. Oh no, Euro Aussie. Sorry, I did remember that Lewis wanted to know about Euro Aussie. And are we looking for longs? And the answer is always going to be, from me, Lewis, it won't ever change. If there's a reason to trade long, I'll trade long. Now, this could be the start of that. This could be a bullish engulfing bar when it closes in 41 minutes and 30 seconds. Now, if that were the case, what I would then seek is price to come back down here and test maybe that level there and give me a higher low. I'm on the 4-hour chart, so that could happen anywhere, but that's what I'd be looking for. If I were to see a higher low here, then that would be interesting. What I could also think of doing is, and this would be very early, but it's kind of there, I could look at that and go break, retest if it were to come back, and look to trade it above that bar if it comes back. It's got 40 minutes to do that. So that's not beyond the realms of possibility, but it is early and it's not waiting for what I need to see really, which is the higher low. Higher low at this point would be absolutely spot on. Then we can look to trade it long. But until then, yes, there's an opportunity perhaps, but it would be high risk. Hope that helps. And I am done. How about you, Ash?
Yes, I am done also. I've taken a short in the FTSE 100 at these levels, and we'll discuss that further in the US session and see what happens. And that's me as well, mate. So for everyone else, have a great weekend. Enjoy yourselves and trade safe. Get your journals in order. Get your analysis in order of your trading week, and see if you can start getting some clarity around things. And we will see you next Monday at same trade time. Same trade channel at 5 to 8.
That's a date. Don't be late. Have a great weekend, guys. See you on Monday. Love the comments, guys. See you.